Two traders, same 4 hours ABC setup on gold, same point of interest. First trader buys the moment price taps the zone. 14 minutes later, he's down $2,340. Second trader watches the exact same setup and does nothing. 11 minutes later, he enters. He walks away with $6,799. Same buyers, same structure, same zone. So what changed? The gap. That is where most traders lose. By the end of this video, I will show you how to identify the gap. Stop. Look at this chart. Gold is at point C right now, live. And right now, traders are buying the same zone, the same mistake, the same result. 2 weeks ago, I showed you the 4 hours ABC model. 100 of you came back and said the same thing. I see the setup. I identified point C, but I kept getting stuck out. I hear you. And what you're watching right now, that is exactly why the market hasn't finished hunting yet. That first touch, it's a bait. It always a bait. Before I show you what I am actually waiting for, watch this. To establish the daily bias, the first thing I look for every single day is a 4-hour structure. I'm not interested in any display. I define my point A, the origin of the move. Price broke POS, then price expand, and this pullback into C is where most traders get chopped out. That was 2 weeks ago. I called this zone before price touched it. Same model, same zone. Now it's late. Stay with me, because by the end of this video, you will see exactly when I pulled the trigger. Because I know some of you are new in here. This is the 4 hours gold chart. Right now, point A, price found its low. Structure held. Point B, structure broke, direction shifted. Point C, price pulls back into the zone right here. That is the model, clean, simple, and repeatable. If you want the full breakdown of how I build this, part 1 is in the description. Go watch it after this. But right now, here is what matters. Price is sitting inside the POI zone, which is the point of interest. And this is where the 4 hours stop talking. It gives precision to look for one thing, the 15-minute chart. That is where the trade lives, and that is where most traders get it completely wrong. Watch what happens when we zoom in. This is where the trade is won or lost, not on the 4 hours, right here. And what you're about to see is 11 minutes that most traders never survive long enough to trade. Watch this carefully. Price breaks new structure to the upside. Buyers confirm. The trend is bullish. Then it tapped point C that almost trader needs. Zone respected, confluence lined up, so they buy. No confirmation, no displacement, no liquidity event, just anticipation, and they make decision. And then this happened. The big player steps in, liquidity sweep, stop taking, account damage, and now they are questioning the entire model. But the model wasn't wrong. The entry was early because the market wasn't finished. You still need one more thing, liquidity, and you just gave it to them. That money did not disappear. It transferred to the trader who waited. This is the trap at point C. And almost nobody talks about what happened after the sweep, because That's where the real entry lives. So what am I actually waiting for? What does the market need to show me before I enter? There is a sequence, 3 specific things. And between the first touch of the zone and the moment all 3 complete, there's a window, a very specific window. Most traders never sees it because they are already stopped out. And right now, gold is sitting inside the window live, which means everything I'm about to show you is happening on your screen in real time. Yeah, what am I waiting for? 3 things in order, no shortcut. Step number 1, liquidity grab. Price sweep below the last 15-minute low. Early buyers get stopped out. The market just collected the fuel. That's step 1. But I still don't enter. Step number 2, displacement. A full body candle, strong close, minimal wick, no hesitation. This is the institutional strength showing itself. The market is telling you something. But I still did not enter because there is one more thing that I'm waiting for. Step number 3, the return. Price pulls back into the imbalance it just created. That fair value gap, that is where precision lives. Not the first touch, not the sweep. The return after displacement. This is what I call the C-leg timing sequence. And here is the part that will change how you see every trade you have taken before this moment, on gold specifically. That sequence takes about 9 and 13 minutes to complete. On average, 11 minutes between the first touch and the real entry. That is called the gap. That's what separates the trader who catches the move from the one who found it. Most traders donate to the move. Professional collects from it. But knowing the sequence isn't enough. I've seen traders who understand every step I just showed you and still lose because they enter on the 15-minute confirmation and the market takes them out one more time. There is one final layer, and that is the one nobody teaches. Once the 15-minute sequence completes, where London takes out Asia or Tokyo, drop down to the 5-minute. I'm not guessing, I'm not hoping, I'm waiting for one thing: a clear break of short-term structure, decisive close, full body close, not a weekend, and a pullback. That's my trigger. Entering inside the fair value gap on 15-minute confirmation, stop loss below the 15-minute structure. This gives the trade room to breathe. Target back to the 4 hours objective, minimum risk reward 1:6 ratio. Now that the trade has full alignment, 4 hours for direction, 15-minute timing, 5 minutes for precision. Same setup, everyone saw at point C. The difference is patience, gives you different results. This is the difference between finding the move and being on the right side. So here is what you now understand. The 4 hours gives you direction, the 15 minutes gives you timing, the 5 minutes gives you precision, 3 time frames, 1 decision, 0 guessing. If you have been stopped out of point C before, this is not a bad setup. You were too early. And now you know why. Comment timing if this changed how you see point C. In the next video, I'm showing you how to identify the exact liquidity pool before the sweep happens, so you don't react to the odds, but instead you anticipate it. Subscribe to Palmist FX, turn on your notifications so you don't miss the next gold trigger. At Palmist FX, we don't trade emotions, we don't chase moves, we wait for the next market to come to us. That is the Palmist way. Stay disciplined, stay profitable, and I'll see you when gold moves.